Well, happy Thursday to you, Mavericks. It is Joe. It's September 22nd. We have just come out of a Fed day. That's right. Wednesday was the Fed announcement, and the markets are a little bit pessimistic after the Fed's continuing to stand pretty strong. We also have seen some inflationary gauges outside of energy. I'm going to give you my 2 cents, my opinion. That's what it is. Take it for what it is. You guys know the routine. Take responsibility for the outcome. So let's get into a market analysis, as we really failed to hold on to the gains for the day. Now, we did get a pretty good move to the downside yesterday. I'll take a look at the charts here in a second and talk about the last couple of Fridays, as tomorrow is another one. Just be leery. How do we finish? Well, the Dow, the S&P, the NASDAQ all lower. The NASDAQ down about 1.37%. At one point, folks, the Dow was actually higher, but towards that last 30 minutes, 15, 30 minutes of the day, all of these markets actually turned down, which is probably not a very good sign for tomorrow's open. Now, oil and gold did slip a little higher. I'm going to call it slip. They were also hurting as well as the rest of the markets, but just tended to kind of float and stay kind of sideways. Now, what it is, the Fed stays on pace. Markets drop below support levels, and they're pretty key support levels. We are already below some decent-sized ones, but yesterday's action put us further. Let's take a look at our advanced decline line. You guys can see the majority were declining, 79% versus 16, and 5 are flat, and then 84% below their 50-day moving averages. Now, what am I talking about when it comes to the charts? Well, if you take a look at the SPY, the 390 level was the big one that we talked about all last week, and comes Friday's move. And by the way, folks, let's talk about Fridays. Let's talk about the 2nd, and let's talk about the 9th and the 16th. We have seen some pretty big moves. Even though one of those Fridays, the 2nd, was actually a move to the upside, Fridays have been pretty volatile, at least the last few. So I imagine tomorrow, we might get something very similar. And based on where these markets closed, showed you the charts before, we've already got a pretty good push in that direction. Now, we are definitely below support levels here at the 390. Like I made mention, we're actually starting to revisit some of the lows, this consolidation area here between the end of June and, or I should say mid-June and mid-July. We'll see where these markets go. Volume was a little larger yesterday than it was today, but the volume is pretty decent across the board, so there is participation. Here's the Qs showing the exact same thing. It is actually already down towards those levels of June and July earlier this year. The volume, pretty decent, but we are not getting the volatility. The volatility is still not capitulating. We are rolling lower. The markets are moving to all-time lows, but it's doing it in a very organized, I expected it fashion. So there's no panic just yet, which means this might go longer than I think we want it to. That's my opinion. I definitely think we do get bounces here and there. But based on what I've seen over the last few Fridays and coming out of another Fed meeting with the way we closed, I don't think we do much more than sideways to down, at least going into the weekend. Take a look at the heat map. You had some winners, some losers. Some healthcare did pretty good. Everything else, not so much. Microsoft has its own little news. Apple was doing pretty good for the last few days. I do believe it has a lot to do with maybe their iPhone and the projections there. But across the board, pretty much red. Not a lot to report, and nothing really outside of kind of glass half full. I don't really want to go past that. So where are we? It's obvious. Below the 20, below the 50, sloping 20, 50. The bearishness is in. The Fed is aggressive. They got the hammer down. We've got inflation outside of energy. There is so many reasons to be bearish. It's pretty easy to be bearish. Now, that being said, the markets can bounce in light of bearish news. But the sentiment overall, if I had to look forward 2 to 3 months, it's got to be -2 on the monthly outlook, and even -2 for the rest of the week. Yes, folks, I only have 1 day left, but I've seen these Fridays get a little bit tumultuous, to say the best, to say the most, I should say. Potential trade sides, please revisit the Wednesday class and the Sunday's classes, because there's more than 2. These are the only ones that I thought really kind of stood out, especially after yesterday's move and the volatility they had. It was a volatile day, folks. We were up quite a bit and then came back down, and it kind of wipes things off the mat. I did like Coin and Upstart, and we'll take a look at both of those. This is Coinbase. It was rolling over already. It looked pretty decent. It's not quite confirmed for me. I'd like to see it break below the 60 and maybe revisit that $50 level. You can see that same consolidation that I've been talking about over the SPX chart. and the Q chart between June and mid-July. So it's got potential to get there. Look at that, almost 7% down today, but this is a big mover. And I think if the markets continue south, I don't know how this doesn't just follow suit. On the less expensive side, I should say, we've got Upstart Holdings, and this is pretty good. I zoomed in a little bit on this because it's come down quite a bit. If you guys are looking at a 6-month chart, 8-month chart, it might be a little tighter. But I do like the consolidation at the 25 here, and then it's just slowly bleeding off. This is a nice diagonal approach. $20 target. Yeah, that doesn't look like much, guys, but depending on how much you could bring in by selling that 20, could be a pretty good trade. That's all I got. I know this was probably the fastest class ever. I'm not trying to time it or anything, but coming out of a Fed meeting when you get as much volume and volatility as we did after that announcement, and seeing how these markets seesawed. Oh, by the way, folks, take a look at bonds and the yields. The one thing that just went nuts were the yields. And once the yields shoot up as fast as they did, knowing the Fed's going to keep the hammer down, then the markets are just going to struggle to try to keep pace. So the Fed stance remains hawkish. Markets failed to gain ground today. Remember, we did slip into the close. Fridays have been tricky this month, so just be leery. I've seen it gap up, but that Friday that we saw on the 2nd was actually the beginning of a bounce. The 9th and the 16th, two different stories. Big red candle on the 9th, and the 16th we had that gap down. So I imagine we get a little bit of the fall through to the downside unless something comes out in the news that I'm not expecting. So a small uptick in jobless claims to add a little bit of insult and injury. I don't know if that's just circumstantial, and it was a slight uptick. I think it was 217 to 218. But it could be enough to shake the trees based on what we just came out of yesterday. Rates, like I say, shot up pretty high. We do have earnings, Costco, FedEx. We are going to have some coming up, so just check your potential trades for earnings before you make them. All right, guys, short and sweet today. We got a Friday coming. I'd probably just sit on my hands if I was you, just based on the last 3 Fridays, and see what the markets can give us. Maybe we'll have a little bit more to talk about on Sunday's trading room. Thanks for joining me, folks. We'll talk to you next time. Bye, everybody.